Hi, I'm going to walk you through how to do this exercise. You'll be doing an exercise just like this one with different names and numbers, but it'll work the same way. So I wanted to walk through our first one so you could get the idea. The first thing we do is we have this exercise. We see we're given a series of transactions or happenings, and then we're told to prepare journal entries. And we're told to post the journal entries to the appropriate T accounts and to prepare a trial balance. So these are the instructions. Then there will be an Excel file where we do all our work in this Excel file. Please don't delete any rows or columns, just use the Excel file as it's given for this exercise, and that's what I'm going to be demonstrating. You can see in the Excel file there is part A, part B, and then off to the right, if you scroll to the right, there will be part C. So there's room for all your answers in this worksheet. Then I do want to point out a couple other resources. First of all, the first thing, we're going to be looking at the first 4 steps of the accounting cycle in this exercise. And the first step is to identify and analyze transactions. And I just want to remind you what a transaction is. A transaction is any event that has a financial impact on the business and can be measured reliably. Something happened and we can measure it. Also, I referred to accounting cycle steps. There's 10 steps in the accounting cycle. This exercise covers the first 4. So this exercise, we're identifying and analyzing transactions. We're recording the transactions. We're going to post the transactions to the T accounts. And we're going to prepare an unadjusted trial balance. So that's what we're doing in this exercise.